Global stock markets surged today, providing much-needed relief to investors after weeks of uncertainty. The catalyst for this rally? A strong U.S. jobs report that has eased fears about the health of the global economy. This report, which exceeded expectations, has painted a more optimistic picture of the U.S. labor market and, by extension, the broader economy. It also alleviated concerns that a recession could be looming, which had been weighing heavily on the minds of investors. The jobs report indicated robust growth in employment, with more jobs added than economists had anticipated. This is a clear sign that the U.S. economy is still expanding, even in the face of global economic challenges like inflation, high interest rates, and geopolitical tensions. The strength of the U.S. labor market is often seen as a barometer for the global economy. So this positive report has had a ripple effect, boosting markets around the world. In Europe, stock indices like the FTSE 100 and the DAX saw gains as investors welcomed the news from across the Atlantic. European economies have been grappling with their own set of challenges, from energy crises to sluggish growth. So this jobs report provided a much-needed confidence boost. Many investors now believe that the global economy, while not without its challenges, may be in better shape than previously thought. European markets reacted positively, with banking and technology sectors leading the charge. Asian markets were also uplifted by the news. Markets in Japan, China, and South Korea saw gains, with the Nikkei 225 in Tokyo jumping significantly. The positive sentiment in the U.S. gave Asian investors a reason to be optimistic, even as these economies deal with their own uncertainties. In Japan, for instance, concerns about deflation and weak consumer spending have been dragging down investor confidence. But with the global outlook improving, there is hope that demand for exports from Asian markets could rise, particularly if the U.S. economy remains strong. But what exactly is it about the U.S. jobs report that has had such a calming effect on global markets? The report showed not only that more jobs were added than expected, but also that wage growth is stabilizing. This is a key factor, because while job growth is a positive sign, rapid wage increases can fuel inflation, which in turn forces central banks to raise interest rates. The fact that wage growth is steady, rather than accelerating, suggests that inflation may be easing. This in turn reduces the likelihood of aggressive interest rate hikes by the Federal Reserve, which is something investors had been concerned about. Higher interest rates can slow economic growth by making borrowing more expensive for businesses and consumers. So, any sign that the Fed might take a less aggressive stance on rate hikes is welcomed by the market, with the strong jobs report suggesting that the U.S. economy is not overheating. In addition to the relief provided by the U.S. jobs report, it's also worth noting that global investors had been seeking any signs of stability amidst ongoing geopolitical risks. For months, markets had been rocked by concerns over the war in Ukraine, tensions between the U.S. and China, and volatility in oil prices. Oil prices also reacted to the jobs report, with Brent crude and West Texas Intermediate both seeing slight increases. However, it's important to note that while today's rally is encouraging, some analysts are cautioning against over-optimism. The global economy still faces significant headwinds and lingering supply chain disruptions. While the U.S. jobs report has provided a temporary boost, it doesn't solve these deeper systemic issues. This means that further rate hikes are not off the table, especially if future data points to rising inflation. Investors will need to keep an eye on the Fed's next moves, as any surprises in monetary policy could quickly reverse the gains we're seeing today. For now, though, the strong jobs report has injected a dose of optimism into the markets. Investors are cautiously hopeful that the U.S. economy's resilience can continue to support global growth. The ripple effects of a strong U.S. labor market are being felt across the world, with global markets reacting positively to the news. It's a reminder of the interconnectedness of the global economy. What happens in the U.S. can have far-reaching implications for markets across Europe, Asia, and beyond. In summary, today's stock market rally is a direct result of the U.S. jobs report calming nerves about the state of the global economy. While challenges remain, this data has offered a glimmer of hope that the global economy may be more resilient than we thought. Investors are breathing a sigh of relief, at least for now. But will this optimism last? With inflation, geopolitical tensions, and central bank policies still looming large, the markets could easily shift again. The next few months